Hey everybody, this is Jose. We are about to start the session. We just reached the top of the countdown. So basically, we are live right now. Please go ahead and confirm that you hear my voice, that you see my screen, that everything is fine. I just need one extra second here as I had to reboot something on my end. So I am getting everything ready for the session, which should take me just a few seconds. So in the meantime, yes, very good. Thank you so much, Gary, Abinex, Froilan, Gali, Charles. Very nice. Very nice. Perfect. Okay, so let me bring this into the main screen. This is the trade station I was rebooting. I told you that we're going to be using in the session as always. Okay, but before we start, of course, I also want to go ahead and introduce the session officially, okay, which implies first being polite and saying hello, everybody. How are you? I'm just putting myself here in the corner. Welcome to the session today. Today we're getting together to do a little bit of intraday trading, isn't it? Today is a short-term day. Today it's May 5, okay? So Cinco de Mayo for some of you, if you are in the States or Mexico. And I have a disclaimer to read and we'll get going. We'll start the session. So disclaimers, the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And that's the classical, typical disclaimer that we see all the time when there is a financial presentation. And obviously, we are here to talk about the markets, which is obviously financial stuff, isn't it? So anyway, so you can see my trade station is still loading here. So I will also take advantage of this to bring the trading view on the screen. So that way we are ready to go. Okay, I just had a little problem, minor thing, with my trade station, which I run in a virtual machine. So really the problem was not with trade station, with virtual machine, which had me reboot. But that's it. I am now launching everything I need, multiple charts on TradingView, as well as TradeStation here, ready to go. Let me close a couple of the workspaces so we can just focus on where we need the most, which is the red screen. Here we go. So this is the place where I wanted to be. It took me a couple of additional minutes compared to a normal launch, but we are there. This is what matters. Chat box first, Sandeep, Diane, Roy, Diane, very good. Wonderful, wonderful to see you all here connected. And let's begin. So what do we have? Again, today we are here for intraday trading purposes, right? So on the left, for the ones of you joining the sessions for the first time, we have futures markets. And you can see those futures markets, we're going to attack them using climates set. Okay, climate set right there. You can see that properly here now. Climates in the 15-minute time frame, in the 60-minute time frame, and 4-hour time frame. Okay, this is the climates that we're gonna utilize. In the middle part of the screen, you can see we got Forex. So we have the majors. Okay, majors on the 60 minutes, majors on the 4-hour time frame, majors on the daily time frame. So we're gonna be looking at climates in the 60, the 4 hours, and the daily. Okay, and then moving all the way to the right, we have the minors, and the minors are a bit less liquid. Therefore, our focus would be 240-minute climates as well as daily, okay? But we will not go below that, okay? You could, especially if you have a very liquid broker, a broker that gives you very good price fields and very narrow spreads, very good liquidity. But again, it's not the case for everybody, so I will skip it, okay? And therefore, we'll focus on those markets, which normally is plenty, okay? So first look is futures, and when looking at futures, we are looking for our golden alerts, okay? And here we have a good one. It's near and sensible. That's good. Problem is that the climate is gray color, and that means the climate is not confirmed. So crude oil is almost subject of an opportunity, but it's not meeting our rules as of now. So therefore, we're just gonna skip it. Okay. So we'll come back. Remember, those climates updates every 15 minutes. Okay. So if you look at the current time in New York, it's 11:08 morning hours. That means that 7 minutes from now, we'll have an update on the climate. So we may have new golden alerts on the future side. We'll see that later on. So we're going to start now looking at the Forex markets, starting with the 60-minute climates and the majors. And looking at that, we can see on the 60-minute time frame, we have a near sensible opportunity with the GBP US dollar, which is the pound. Okay, so we're going to start there and see if that is subject of a proper opportunity or not. By the way, nice coincidence. We already got the pound loaded, GBP USD, GBP USD. And of course, we're going to ignore the charts on the right. Okay, we're only going to focus on the 60-minute time frame combined with the 8, because this is the combination that we want to utilize when looking for 60-minute climates, 60 and 8. The other time frames are certainly valid for other trades, but for the one that we're going to plan now, which has a starting point being a 60-minute climate, then we will ignore everything on the right and focus only on the charts from the left. So what do we have? Climate is a red color thick dot. I mean, we know this from the red screen. This is nothing new. So it's a confirmed climate to the downside. This climate has been propagating for one candle, which is 1 hour or less. And statistics suggest that this type of market condition could last up to 6 candles, which is 6 hours. Remember, we always round up, okay? And the value on the left, notice the up arrow for the ones of you who are new to the session. So we ignore that because the up arrow represents up climates, and this is not an up climate. The color is red, and that means it's a down climate, not up, okay? So now that we know we are in a down climate, 1 out of 6 means that the climate just started, okay? And guess what? A climate that just begins could abort, okay, and go from red to blue, okay? But also a climate that just begins can then propagate. And this is our bet. We're gonna bet that this market will continue moving in that direction for another 6 candles. That's the idea. We want to catch such move if such move was to happen, and we want to do it safely. So how do we do it safely? We first look at the reference price. Okay, why am I calling this the reference price? It's the black color. Okay, it's the black color, and black color means it is not the current price of that candle. It's the current price of the EMA. We have an EMA loaded on the chart. So the black color, it's the price of the EMA, and the EMA is an average, and the average is a reference price. Okay, because notice how price supports itself from the reference price, right? Supports itself. Come here, bounce, okay? And here it was not respected at all, okay? Here was respected for a bit, not anymore, and now the idea is we expect it to be respected and continue down. Now, being respected or not is not a matter of luck or hope on our end. It's a matter of on-field orders. If there are on-field orders around 124.53, then the market will move down. If there are no on-field orders around that price, then nothing's going to happen. So the question is, where are the on-field orders? Okay, so let me turn off all those on-field orders I got on the right. We don't need those, okay? Don't want to confuse. So I'm turning everything off on the right, and I want to turn the on-field orders on the left. AutoUFOs, 1, 2, 3. Okay, and now we're going to get on-field orders show up here, and the question is, where are they? Okay, where are those on-field orders on the 8-minute time frame? Okay, and you can see we got on-field orders right here. Okay, that's the meat of the on-field orders. Okay, it's the maroon red color, and the maroon red color goes all the way to 124.57, all the way to 124.45. So we need to remember 45 and 57, and with these two values in mind, okay, 45 and 57, the question is 45 and 57 enveloping 53? And the answer is yes. In other words, if the pound goes back up, which by the way is likely because we got a green UFO there, very convenient. So the pound is likely going to back up into this UFO. The moment the pound goes back into this UFO, the on-field orders will hit the pound down while the pound is arriving to the EMA, which may be the source of a new pile of unfilled orders to be added by fund managers, etc., that use those averages, or even computerized trading systems that use those averages as valid entry points, adding more unfilled orders to the unfilled orders already available on the screen. So what is that going to motivate? Well, probably, very likely, the market would fall. And if not, above 57, we will use a stop order. So if we are wrong and we lose on the trade, the most we will lose is the vertical distance between the entry and the stop, which is basically the thickness of that UFO. Okay? So kind of summarizing at the speed of the light, the rationale behind the methodology. Okay? So we got the climate, we got the EMA, we got the UFO. So I would like to look at, let's see if we got a good target or not. So to check the target, notice I'm using the 60-minute time frame, okay, which is the gray background color, okay? So I'm turning on the 60-minute time frame, and we can see unfilled orders to buy are located all the way at 124.03, okay? So let's do some math on the screen, okay? We're gonna keep it very simple. I mean, if you are using TradingView for a while, you are probably a lover of TradingView because there are so many tools that are so convenient, such as I can type my trade plan here, which is a plan where I want to sell, and the final target will be 124.031. Okay. Remember, we need to utilize 4 decimal places, so we need to do a little bit of rounding, okay, to the 4th decimal place, and because it's a buy order, green UFO buy order, so we'll round to 04. Okay, and then because it's a buy order and Forex is a decentralized product, we need to add 2 pips. Okay, so in other words, our final target would be 124.06. With that target in mind, okay, which I'm going to leave on the right in a written form, as you can see, I'm going to go back to the 8-minute time frame, okay, and input my entry values, which would be 124.451. Okay, 124.451. That would be the entry price. Of course, I need to make it 4 decimal places, so I'm going to make it 45, okay? And then we would have to look at the stopping point, okay, which for the stopping point, as of now, I'm going to type 124.57.5, okay, which is the top value of that UFO band. Now, of course, I need to do a little bit of working on this number, right? I need to use 4 decimal places, then add 5 pips for the breathing space for the stop, plus add additional 2 pips because it's a buy stop, buy orders. We need to add 2, isn't it? So I need to do all of that. But on top of that, I'm not done yet. I also want to check not only the 8-minute time frame, I also want to check the 8 range time frame to see if I got, oh, sorry for that. I just did it on the wrong chart. And let me go back to 1 hour. Here we go. Now, clicking on the top one, which is 8 minutes, I'm going to switch that to 8 range. Okay, and I want to find out if there is anything between 45 and 57. And guess what? I got all of these here. So I'm going to have to take this into consideration. Okay, because I got UFOs that go all the way to 58.9 all the way to 61. Okay, and the reason why this is important is because, look, if you look at 57.5, and again, let's pretend those red UFOs on the 8 range time frame were not there. Let's pretend they don't exist. So then I would take 57.5, I would make it 58, right? I would add 2 because it's a buy order, and then I would add 5 because it's a stop, and that would become 65. Correct? But what's going on if I do all of this? Well, what's going on is that basically I went through these values, okay, from 57 to 65. 65 is right there, right? So I went through these values without taking those values into consideration. So what I'm trying to say is that instead of utilizing 124.57.5 as my reference point for the stop, which I did based on the 8-minute time frame, the best way to do this is to try to avoid a stop out, okay, which of course that's never guaranteed, but we should work on trying to avoid stop outs, isn't it? So then it would be better, instead of using 57, to be a bit more generous with the breathing space and use 61.5, okay, 61.5, which if I use 61.5 and I do the same exercise I did before, it would be 62. Then I need to add 2 because it's a buy order that's 64, and then I need to add 5, which is the breathing space for the stop, which is 69. Okay, so in other words, we are talking about 124.69. That would be the location for the stop, which is now way higher, all the way there, and that's the white space on the chart, and that makes me happy. Okay, this is the right way to place the stop. You know what? It's not. It doesn't make me happy. Okay, why is that? Because notice what happened the moment I just came back to the 8-minute time frame. What happened is that 69 is now falling within this UFO, and then we need to use 81 and etc. etc. So anyway, the problem with this trade is that maybe on the futures markets there is a way to execute this trade better, because with futures we got more precision because it's a centralized asset, isn't it? But with spot forex, unfortunately, because it's decentralized, we do find multiple pockets of orders in different places, and unfortunately our stop would be too far away, because let's say I make my stop to be, I'm just gonna make this up, okay, so you get my point, but let's say I make my stop to be 85. Okay, so what's happening now? Well, what's happening now is that I'm risking 40 pips to make 39. This is even less than 1-to-1 as a trade, so we don't do that. Okay, so hey, no trade on the pound. It was looking good for a moment, but it didn't, so we're gonna skip it and we will come back later. Okay, now back to futures. Okay, we got an alert here with gold. Okay, so gold is giving us a flashing alert, okay, as you can see. So let's go ahead and take a look at gold, and then we will continue working on the Forex markets later on. So gold. Okay, now, when loading gold, we are dealing with a commodity. While my gold workspace is loading, I want to show you, as I always do, a very useful website called barchas.com, which has a future section where it's very convenient for you to click on the metals column. Okay, you could click on the metals column. We take a look at the chat box. Everything is good. It seems that everything is good. Everybody's silent, actually. Hey, can you guys give me a little bit of feedback? Everything good out there on your end? If it's good, just say good. So then I know it's good. So looking at gold, okay, and again, I do that all the time, and some of you may be thinking, okay, Jose is doing it again. Of course I'm doing it again. This is the job of a trader, to never be overconfident. So I need to double check that I'm using the right symbol. The M seems to be the letter with the greatest liquidity. The greatest liquidity is going to be those figures, and the question is it the M? Yes, it's the M. Okay, so I just confirmed that gold, the right gold contract to trade is the M, and now I am confirming on TradeStation I got the M, so I'm good to go. Everything is looking good. Okay, and it's looking good. It's actually looking like we may have a trade on gold here. So what do we have from a climate point of view? Well, from a climate point of view, okay, we have one thick dot, number one out of what statistics suggest is going to be 4 candles. So statistics suggest that gold is going to move up for 4 candles, 15 minutes each. That is a 1-hour trade. This is the beginning of that 1 hour, candle number 1. So if we were to have gold fall a little bit from 1706 something to 1704.7, okay, and we had a UFO at this price level, then we have a trade. Okay, so the question is, 047, do we have a UFO? Yes, we do. So we have a UFO right here. Unfortunately, I'm not happy, guys. Yes, we're gonna pass. Okay, it's one of those cases where it's a bit sad. It's a bit sad story. Okay, we're not gonna cry. Okay, we are professional, but it's a little bit of a sad story because we got actually 4 UFOs supporting the trade. So this is a very likely trade. Okay, even though anything could happen anytime. But the problem why we're not going to take the trade is that the 17049 falls in the middle of that UFO. And therefore, the top of this UFO should be your entry. And because there is an overlapping between that UFO and that UFO, and 023 overlaps with this one too, that's the bottom part. And that one too, okay, well, that's the bottom part as well, okay? So what does all of this mean? Well, this means that your entry would be all the way there, which is like almost 07. Your stop would be, below 02. So basically you got 5 full points. And if you do this with 2 contracts, it's going to be $1,000 over of risk, which it's okay. But at the same time, I would understand that probably for most of you, especially the ones of you in learning stages, maybe a little bit too risky as a trade. And also, and the worst part really, yeah, it's not the money part. The worst part is that the further away your stop is, then the further away your safety target is. And if your safety target is very far, then the role of the safety target is not safety, it's just target. Okay. And therefore, long story short, too many UFOs, touching each other. Okay. And we cannot take the trade. So we're going to watch it because maybe later that UFO will disappear, a new UFO will be formed in a different location, and we'll have a way to enter the trade. Also, less than 15 minutes from now, we'll have an update too, isn't it? So we'll see. But as of now, no gold trade. Okay. So I'm going to take a sip if that's okay, guys. Back in a sec. Sorry for that. I was really thirsty. And magic. Nice. Perfect. Good. Okay. So everybody's good. I like that. So let's continue working on the currencies. Okay. So I'm going to go back to the middle part of the screen. And now we are switching to 240-minute climates, and we have two possibilities, okay? Two possibilities which are near sensible because there is a number 3, but notice how it's gray color, okay? Meaning the climate is not confirmed, so we'll skip that one. And this one here with the daily time frame is also gray color, so we'll skip that one. So basically, with the majors, we got two more shots, which is the pound US dollar and the Aussie US dollar, both in a 240-minute time frame, and therefore this is what we're gonna check. So let's go back to a trading view. We are now looking at GBP US dollar, okay? Same as before, but instead of looking at the charts on the left, okay, we are now gonna ignore the chart on the left, ignore the charts on the right, and our focus now is exclusively the middle part of the screen, because notice I got the 4-hour time frame there that goes with the 21-minute time frame above. Okay, so gray color for the background for the climate, white color on the top for the AutoUFOs. Okay, that's how we go. Okay, and I got bad news actually. I got bad news here. When I zoom in, okay, you can see how the climate is a thin dot, it's not thick. Okay, so maybe earlier during the candle it was thick, but it's not. Or maybe, and this is something that happened before in the session, so this is not new unless you haven't been with us for a certain amount of time. Maybe it's the first time for you, but it happens sometimes that TradeStation will tell you on the radar screen that you have an opportunity, and then when you check TradingView, we don't. Okay, and this happens because TradeStation has its own data feed for Forex, and TradingView uses other data feeds, and sometimes they match, sometimes they don't. Because remember, Forex is a decentralized market, so each broker provides slightly different feeds. So what to do when this happens? Well, option number 1 is to move on and go to the next currency. Option number 2 is to use a different provider. Okay, so GBP US dollar. But instead of using FXCM, which I'm using now, okay, and by the way, you may wonder, how do you know you're using FXCM? Okay, well, my charts are very small here, so it doesn't show. But if I maximize my charts, okay, well, actually, it doesn't show, not because my charts were small size. It's because I changed the settings here. Now I remember, precisely because my charts are small. I wanted to minimize the amount of information on the screen to not to confuse. Okay, but basically, if I show symbol, name, label. No, not on the scale, sorry. Symbol, what was it? Status line. Here we go. This is the place. So if I click symbol, okay. So now here on the top, it says FXCM. Okay, you see? If I uncheck symbol, it goes away. It doesn't give you all that description, which is really not needed because you have the GBP US dollar on the top, so you know it's the GBP. You also have it on the watermark. So I uncheck it just to save space, okay? But notice how, in this case, if I check it again, I'm using FXCM. So again, as I said before, you got two choices. Choice number 1, if you see that the climate is not good, which is this case, move on and go to the next currency. That was the Aussie dollar. But if you want to give the pound another opportunity, you could certainly type GBP US dollar, click on the Forex tab, and instead of using FXCM, which is the one I'm using now, which is the default in TradingView, you can move to Oanda, for example. And when you move to Oanda, let's see what's going to happen. Here we go. When you move to Oanda, we're going to have a different understanding of the climate. Okay. And in this case, notice how the climate is actually red and thick. Okay. So again, this is the tricky part of Forex. Okay. And personally, when I see conflicts like this, I become uncomfortable. Okay. And my normal action is go trade a different currency. Okay. But again, some of you may prefer, I don't know, maybe you have limited time, something like that, and or maybe you don't trade the minors and there is no other trade today to take, and you have it in your plan that every day you want to take a trade or something like that. So then this would be the way to do it. Just keep changing the provider until you have a particular reading that allows you to take the trade. Okay. It's not ideal because it creates a little bit of variation in your action, right? I am a firm believer, and I'm sure you've heard me talk about this before, and I guess it's common sense. So hopefully you agree with me. But I'm a firm believer that trading is all about being mechanical. And of course, if now, depending on the dot, you're going to change the data provider or not. So it certainly injects a little bit of subjectivity into the process, even though in the end, you're relying on the tools. So it's not like you're improvising and forcing a trade. You have a reason to force a trade, but I do see it a little bit like forcing a trade. Okay, so I would recommend that when you see a conflict like that, not to do it. Okay, and that's it. That's what I do. But again, I'm giving you choices just in case. Okay, so going back to the next one, which is the Aussie US dollar. Okay, so I'm gonna go for the AUD USD, and here we do have the normal thing, which is that there is an agreement between TradeStation and TradingView, where now we do have a defined climate. It's blue, one candle into what could be, based on stats, 7 candles, 4 hours each. So that could be a multiple day trade, 3-4 day trade, something like that. That's nice. And again, for us to take this trade, we need to wait for price to come to the EMA, which is the black line, and from there it may move those 7 candles. Okay, so our reference, long story short, is 36. Okay, 36 is our reference point, and the real question is, do we have on-field orders around 36? So turning on AutoUFOs on the 21-minute time frame, and almost or yes, difficult to say. So let me explain what I mean by that, because that was really, really imprecise. Okay, so take a look. The on-field orders that we have available are located at 32. Okay, the EMA is located at 36. So in other words, they don't line up. Okay, we need the UFO to envelope the EMA. It is not the case. So you should say, Jose, go find another trade. Okay, so why did they say almost? Maybe yes. Why did I say that? Well, because the EMA, the M stands for moving, exponential moving average. In other words, the average moves. So when that currency, when the Aussie drops from 52 all the way to 32, this is a 20 pip drop. Could it be that the EMA drops by 3-4 pips? Could it be? I would say yes. Okay. Now, do we know for sure? No. What's the right way to do it? Place an alert. So when price is very close, you are alerted and you're ready to go, because now you can confirm. Okay. But it's certainly looking like, if it's not going to be there, it's going to be very, very near. Okay. So, this is probably a trade to be executed. Okay. Furthermore, we also have the range timeframes. Okay. So I want to check not only the 21-minute time frame, I want to check the 21 range timeframes to see if we got something around 36, and we don't. Okay, on the range time frame, we go from 42 all the way to 32. Okay, so we don't have anything at 36. So in other words, here the way to attack this trade is we need to place an alert. Okay, now because it is looking like it's going to be a valid one, so I'm going to do everything. I'm going to place an alert. Okay, so you see how it's done, but also I'm going to plan the rest of the trade, in case the alert is triggered and everything is good. So then you have the parameters of the trade so you can execute it. Okay, but you know what? I'm going to do that after. Let me go back to futures because we got an update. Okay, update. Gold is still golden color. So let me see if we got anything on gold. So what do we have? The EMA is 047, 047, no more UFO, 047, no more UFO, 047, no more UFO. The UFOs we got are lower than 04, so we don't have an overlapping situation, okay? So what needs to happen now is gold needs to do whatever it has to do, but hopefully gold will create some sort of a UFO right here. And if that's the case, then we'll wait for price to come into this UFO and take the trade and ride it. And hopefully there will not be overlapping. There will be white space in between, so we can have an entry and a stop above and below the UFO. We need that UFO to form. Okay, and this could happen anytime, especially on the volume time frame and the tick time frames. Okay, so I would like to have someone help me with that. Okay, if while I'm planning the trade on the Aussie dollar, if you were to see a UFO form on the gold, because when I share my screen, I can only share one screen, I cannot share multiple screens at the same time. So if anyone sees gold forming a UFO lining up with the EMA, please type it on the chat box immediately, okay? And that way, I will know, and I will then go ahead and take care of the trade, okay? Agus, can you explain the range time frame? Yes, Agus, today I cannot, because today is not a sharpening day, but I will give you an answer so you can get your answer properly, because of course I will need a little bit of time to answer that, isn't it? So if you look at the YouTube channel, and by the way, I never said it, if you guys are enjoying the session, give us a thumbs up, click on the bell on the top, so you get notified, all those things. Probably you have done all of this already, but just in case. Okay, so now in the sharpening playlist, okay, so if you click playlist sharpening, so we got targets review, okay, and Q&A. Okay, so I believe, and you know what? Now I got confused myself. I'm not sure if it's this one or that one, the one in February 2nd or the one on April 12th. I think it's April 12th. I did a proper explanation of range timeframes. Okay, so August, if you don't mind, I would like you to take a look at that one. Okay, and if it's not in this one, then watch the other one, either April 12th or February 2nd. I believe it's April 12th. Okay, and you will have a proper explanation there of the range timeframes. Okay, but long story short, range timeframes is kind of like a microscope. Okay, so you are zooming in the time frame to try to find something a bit more precisely. That's what this is. Okay. Sorry, guys, I happen to be very, very thirsty today. Okay, so let's continue working on this trade to see if we will have a plan or not. So first thing, on the Aussie trade, I am placing an alert right before the UFO. Okay, so right there is the UFO. I'm gonna right click, add alert. Okay, if price crosses, alert me, yes, create 1, 2, 3, that's it. The alert is created. You can see I have a dotted line with a tiny triangle right there. You see that? Okay, that's my alert, okay? And this, by the way, even if you turn off your computer, the alert will still be working, okay? So make sure you install the TradingView platform, the TradingView app on your phone, which, as you know, is free. And then you get the alert. You get push messages on your phone, like if someone sends you a WhatsApp message or something similar, and you get alerted real time. So it's pretty cool, okay? Even if your computer is off. So anyway, you got the alert. Now let's continue planning on the trade. So for me, to continue with this, I need to see where's my target. So target, turn on AutoUFO, and we can see the target, if any, was going to be there at 64.94. Okay, so we are clicking on the buy, because this would be a buy opportunity. Target would be 64.94. Okay, now the color of the UFO is red, meaning we're gonna sell there. So when adjusting the 5 decimal places to 4, we need to round down, so it's gonna be 90. So 0.6490, that is our target. Okay, so no need for auto UFOs in this time frame any longer. So simplifying my view by turning it off, and then back to the 21-minute time frame here. And I want to understand better what's available here from a UFO point of view. Okay, So what do we have? Oh, my friends, I got a bad news. It's kind of funny, but it's the backward image of what happened earlier with the pound. Okay, actually, I'm even gonna cancel the alert. Okay, so here's the alert. Cancel. That's it. No alert. So why am I canceling the alert? Well, because look, if this UFO was to be my entry, which I need to confirm with the alert, my stop would go below 21. And if I add 5 pips of breathing space, that falls under this one. Okay, and if you look at the color, olive color is there. Notice how olive color ends here. So that UFO has the starting point above and the ending point below. Okay, and in other words, my entry would be 32, my stop would be below 55, okay, and my target would be 90. So basically, it's a one-to-one trade. You can see that visually. And again, is it wrong? No, it's not wrong. Does it meet the plan? Yes, but not from a risk management point of view. As you know, we need the safety target to happen prior to the final target. And in this case, it will not be the case, given so many UFOs grouped, so many UFOs overlapping each other in this case. Okay. So, hey, this happens. Okay. So we move to the next one. August, we could certainly talk about that in the sessions that we do on the Thursdays to talk about stocks, but really there are so many more advantages of using options compared to not using options that I can certainly talk about it, but it's really almost, I would even say, putting you at a disadvantage to enter stock trades without options. Okay, so does it make sense? Yes. Could you want to do it for the very very long term and be pay dividends and things like that, and it would make sense? Yes, with a smaller portion of your portfolio and little amount of capital, maybe. But as a bread and butter, I would suggest that you expose yourself to options. It would be so much more powerful to yourself. And by the way, back to the sharpening, you got 7 videos there that talk about options, 2 hour long each. Some of them even more than 2 hour long. So you got a lot of educational material on options in the sharpening sessions. Okay, so you can maybe you can take a look and you can see what you think as you go over. Okay. Okay, so no green UFOs have been formed on the gold. So back to our table here. So still gold is the only one flashing. Okay, a little bit of a slow market today. I mean, not slow, but not too exciting. Pound and the Aussie remain. Okay, so we are done with the majors for today. Okay, we are done. We didn't find a valid trade with the majors for today for intraday trading. Okay. With the futures, we'll get a updates in 5 minutes, so we'll come back in 5 minutes. And in the meantime, I would like to use those 5 minutes to look at the miners. Okay, so zooming in the miners. So what do we have? So we have near sensible, the CAD-yen. Then we got gray, gray. So we skip those grays. And then we got 3 more on the top. Okay, near sensible, which is the pound, New Zealand, the New Zealand CAD, the Aussie CAD, and again the New Zealand yen. Okay, so let's begin with the one on the top, New Zealand dollar, sorry, pound, New Zealand dollar, pound Kiwi. Let's see what we've got. Okay, so let's begin first from a climate point of view. Okay, from a climate point of view, thick dot, red color, starting part of the climate. This climate is supposed to last for 6 candles. Okay, so again, same story. This is probably going to drop for 6 candles. That's nice. Our reference point is 57. Sorry, let me say that again, 72. Our reference point is 72. Okay, so ignore the 5th decimal place. Okay, and I take the following 2. 72 is the reference point. So do we have any red UFO at 72? And we don't. Okay, 72 is there. Okay, and there is no UFO. Okay, I mean, you can see how price shoot up and then drop like a rock from there. So they were on field orders before. Okay, they were on field orders before. I'm pretty positive if I move my mouse to before that, out of curiosity, here we go. We got on-field orders, okay? But not now, okay? Not now. So at least not on the 21-minute time frame. Okay, so we're gonna do a little bit of an X-ray. We're gonna look at the 21 range time frame to see if we got on-field orders around 72, and if we do, then we'll plan on a trade. Okay, and the answer is yes and no. So let me explain why it's going to be no, even though it looks like yes. Okay. So notice on the 21R, 21 range, we got 69 to 73. And you may argue, hey, wait a minute, 72 is in between. Okay. And you're absolutely right. But what's the issue? The issue is that for price to come back, this market would need to come back up towards the EMA. And if the pound Kiwi, which is currently down here, goes up to this UFO, what's going to happen to the EMA? It will not be 72 any longer. It will be 73, 74, 75. And this is now above. And therefore, we don't have the UFO envelope. So I'm kind of visualizing how the EMA would look like if the price goes up. Okay. And in this case, it's not looking good. Okay. So I'm going to go for the next one. Lots of no's today. The next one is New Zealand dollar, Canadian dollar. Okay. Still 4-hour time frame. So many no's today, which is, by the way, the job of a trader is to say no more often than yes. We talked about that many times, isn't it? And it may be that we have one here. So what do we have? Climate, thick dot, okay? 2 candles into the climate. The climate should be 6. So similar situation where we may catch a move down for 6 candles. Reference point is 11, okay? 11. So 11 is where? Well, 11 is certainly between 01 and 23. And not only that, price is already there. Price is currently inside the UFO. So it's time to take the trade now. Okay, we have a trade here. Now, doesn't mean I checked all the rules yet. So the trade may be invalidated. Remember, our job as a trader is to discard trades more often than accept trades. So always be picky, always be selective. Okay, we don't get excited. Okay, we remain calm until the end. Okay, so I'm planning on the target, and I have to say it's looking very good. The target is very far down at 83.795. So 83.795 is going to be 82 for the target. Okay, 83.82. Okay, that's the target. Seems that patience pay. It's really looking like we're going to have a trade here. My entry would be 85.015, okay, which is, if I run, is 85.01. Current price is 85.05. So we get a little bit of a gift of additional 4 pips, okay? So we can get a better price than expected by 4 pips. Thank you very much, market. The stop would be located above that UFO, which is 85.23.5. Okay, so I'm going to leave it like that because before I validate the trade this way, I want to check my 21 range time frame. Oh, I just made the same mistake as before. I forgot to click on the right chart. Here we go. 21 range time frame. Okay, and see where my UFOs are. So let me see. So 85.23.5. Okay, good. It's perfect. 85.23.5, which is the location for my stop, okay, is above all of this. Okay, so then that means that I'm gonna have to use I would need to use between 20.04 and 23.5. I need to use the highest value. Which one is the highest value? 23.5. Okay, which of course now I'm gonna have to round to the 4th decimal place. That's gonna be 24. At 2, because it's a buy order, that's gonna be 26. And then at 5, because it's a stop, so that's gonna be 31. Okay, so that's the trade. Okay, that's the trade. And I have to say now that I've seen everything, that the trade is valid. The trade is to be taken. Okay, so let me explain very quickly everything, and then we take the trade. So this trade is a trade where if you enter at 01 with a stop at 31 and a target at 83.82, this trade is basically 4-1. You are risking 30 pips to make 119. Nice trade. Now, of course, we're not going to take the trade like that, isn't it? We're going to use a safety target, right? So how are we going to do this? Okay. Well, let me write it down on the screen. From top to bottom, on the very top, we have a stop loss, which I just said is 0.8531. 0.8531. Below that, we have the short entry, okay, which we said is 0.8501, even though if we were to do it right now, we can get 0.6, 5 pips gift. Great. Now, below that, we're going to have a safety target, which I need to calculate manually, okay, which is going to be 30 pips below 8501. So that's going to be 0.8471. That would be my safety target. Now, of course, if instead of entering at 01, I enter at 06, right? So then I can use 76 instead of 71, okay? So I could do that. For now, I'm gonna go with 71 is the worst case. And finally, all the way in the very bottom, we have the final target. Okay, so be ready to take a screenshot, guys, which the final target we said is gonna be 83.82. Okay, so these are the parameters of the trade, and of course, everybody needs to define their own trading size based on your trading account, risk management rules, etc., etc. Okay, so let me do mine. Here where it says dollar risk, I'm gonna type $100. Okay, so I'm just gonna go ahead and type $100. So let's pretend I want to take this trade with $100. So that is telling me it's gonna be 46 micros. Okay, so because I'm gonna have two bracket orders, half of the position with the safety target and half of the position with the final target. So I'm gonna, instead of using 46 or using 100, I'm gonna make this 50. That tells me it's gonna be 23. Okay, so I'm gonna use a regular lot size instead of an odd lot. So notice how I type manually 23. If you're using MetaTrader, sorry for that. If you're using MetaTrader, so then what you would do is you would type 0.23. Okay, that is 23,000, which is 23 micros. Okay, it's the same thing. So I'm gonna go with 23. Okay, and of course, because I can get 06. Okay, and I'm gonna start with the safety target. Okay, because I can get 06. Okay, my safety target will be 84.76. Okay, and what I'm gonna do is instead of go limit, okay, I'm just gonna go market to get whatever price is available now with my safety target 76, my stop 31, not yet. I need to go with 23,000. Careful that, because it changed it for me. So 1, 2, 3. Here we go. So I'm in the first portion of the trade. Okay, and now I'm going to do it again with same location for the stop. Okay, and we said the target was going to be, oh, guess what? I forgot what the target was. 83 something. Okay, so let me do this. I'm just going to pick up a random number, 83 something. Enter the other part of the trade. So I got my full position, which is 46,000. Okay. So I got my full position, 46,000, as you can see. Okay. But of course, my final target is not in the wrong place because I forgot my final target, right? So what do? I'm just going to go ahead and check the final target one more time, which is 83.82. Okay. That was easy to remember, to be honest. 83.82. Okay, so I need to change that one. Okay, and you can either move it like that. Okay, you can just move it like that. Okay, good enough. 82.4, modify 1, 2, 3. Okay, so that's it. The target is in. So you can either do it like that. Okay, or you can get here into paper trading. Okay, orders. Okay, and the one. Let me see. Limit stop. Okay, by doing what I just did, I just messed up because now instead of 2 orders, I got just 1. Okay, so I'll pass on that. Okay, guys, you guys forgive me on that one. I should not have dragged. If I had changed the value manually, it would have allowed me to change only one of the brackets. Okay, but anyway, my bad. Again, my executions are an MT4, not in TradingView, so that was the origin of that little mistake. But in any case, it doesn't matter. The trade is on. Okay, the trade is on. We are filled at this price level. Currently, you can see we have a real-time PNL of 0.16, 0.82, negative 0.16, positive 0.82. So, of course, we need this to drop to become really negative, really positive. And if it goes up, of course, it's going to be negative, and we may be stopped out. Okay, so Mr. Climate, Mr. UFO, etc., etc., please go ahead and do your job and push the the New Zealand dollar cut down. Okay, so we'll come back to review this trade in a minute. We have 8 minutes before the session is over. I would like to see if we have any opportunity with futures. We do with the euro contract. Okay, with the euro contract we do, and as I told you, gold is moving up. I mean, it's not like I have a crystal ball, but so many UFOs are certainly increasing the probability for gold to move up. The problem was the risk management was not possible in this trade, and we didn't take it. Okay, but it's nice to see that it is moving up. Okay, so loading the euro futures in a 15-minute time frame. Here we go. Okay, so we'll be there in a minute. Get you, Agus. Get you. I totally get you. Yeah, absolutely. I get you. So here's the euro. We got ECM20. So this is the right symbol. And what do we have? Well, from a climate point of view, well, I'm just gonna say we don't have it right here. So the climate is good. Okay, it's 6 out of 7. That's fine. But we got the EMA being 57.3, which is the current price basically. Okay, and therefore we desperately need a red UFO there, and we don't have it. Wait a minute, maybe I said that too quick. So 58, yeah. You know what? We do have a trade here, because the bottom part of this UFO being 58 will line up with the EMA, which is currently 57.5, as the euro goes up just by a little bit. Okay, so currently it's 56. Okay, so we do have a trade. So let's quickly, because we may need to rush on this one. Let's turn on to UFOs to find our targets on the euro futures. So here is where the target should be. 10834. You know what? I'm gonna make a note of this one. 10834. Okay, 10834. That's the target for the euro. Okay. So I'm going to disable the UFOs. We don't need it any longer. Go back to normal. And price is about to enter. Okay, so we have 64 is going to be 65. Okay, so entry is 58. So guys, I'm placing an order here to short 2 contracts, and I'm using 2 contracts. As always, you need to do your calculation. Okay, so 2 contracts with a stop located at 65, which will make my safety target to be 51. Okay, with a final target to be located at 0834. So I need to scroll down just a little bit more. Here we go. Here's 34. Okay, so in other words, if the euro comes here, we expect it to move down, gets there, you're out of risk, everything else is free risk money. Let's see if that's going to be the case or not. We have rules, we have time stop rules, we have a series of things that we utilize when we trade. But as of now, we just need the euro to move up 3 ticks. Okay, did I say that right? 3 ticks? No, a bit more than that. Yeah, 5 or 6 ticks, and we will be in the trade. Okay, so this is for us to watch. We got 4 minutes to go before the session is over, so we may get filled together at the same time. We may not get filled together at the same time, but make sure you take a screenshot so you understand the parameters of the trade. Okay, the parameters of the trade, which are the entry being at 10858, stop 65, safety target 51, final target 34. Okay, that's the parameter of the trade. And by the way, you know what? Let's use these last 3 minutes to do something important, which sometimes I take for granted, and it's not like I haven't showed you before. But of course, every time we have different traders attending the sessions, because of course, every time we are a larger community, as well as not all of you are always available the same day, the same time. So I don't want to take things for granted, but when I use futures to keep it simple and to keep it fast for you guys, I use two contracts and that's it. The reality is that you should not do it like that. The reality is that you should load a chart. Okay, so I'm just gonna go ahead, load any chart different than the New Zealand dollar, Canadian dollar. So that way I can do something different here. Load ECM 2020. Well, actually, I cannot do it like that. I first need to connect with TradeStation. Okay, so I need to connect with my futures data provider. So I'm going to move to TradeStation. Okay, so connecting to TradeStation here. Here we go. Need to make sure I'm using the right account on TradeStation, which is a futures account. Okay, here we go. So now you can see I got a green light on TradeStation. So I'm using TradingView, but I'm using the data feed of TradeStation. And now I want to use the contract ECM 2020. Okay, here we go. And by using this contract, I can even plot a small time frame if I want to have a similar view. And what I'm going to do is use the order panel, okay, and then I can input my trade here. So if I'm going to short, okay, at 0858, okay, with a stop located at 08, did I say 65? Is it what I said? 65, correct? So 58 and 65, okay, this is the trade. So what does that mean? That means that per contract, every contract will risk me $87.5. So let's say I am a trader who is willing to risk $200, okay? So this, let me type that again. Okay, so if I want to risk $200 on the trade, notice that it says I can go ahead and use two contracts. Okay, because two contracts would risk me 175, which is below 200. Now, let's say I got an account size that allows me to risk 350. So with 350, you can go with four contracts. Okay, so again, I'm using two contracts all the time out of simplicity, but the real way to do this properly would be that you use a tool like this so you can calculate the real size of your trades so you don't get in trouble by either under positioning or over positioning yourself. Okay, you have the right risk, which, as we know, it's determined by the size of your trades. Okay, so good news and bad news at the same time. So it's 12. Okay, 12 means that we just reached candle number 7 out of 7. Okay, candle number 7 out of 7. Statistics suggest the EMA is 56 now. So the EMA is now somewhere here. So much lower than before. Earlier was 57.5, now it's 56. So I'm not sure that trade is gonna make sense any longer. And if it was to make sense, which now I need to watch price come back up and see when price comes into the UFO, if the UFO is enveloping the EMA, which now is less likely than before because we have a new candle on the 15-minute time from here. So I'm about to cancel this trade, guys. But assuming that the trade would be valid, my last comment before we conclude the session today is that you will need to enter the trade with half of the size because we have surpassed what the climate suggests to be healthy. Up to 7 candles is fine, but now you would be entering, actually, with the next candle, you're still fine. But what I meant to say is that next candle, which will be candle 8, that's when you are now surpassing what was statistics suggest, okay? And therefore it will not be good, okay? So new UFO just formed here, so that's good. Okay, new UFO just formed here. The bottom part is 54, the top part is 56.5, so that's 50. Yeah, so if I use this UFO as an entry, which is valid based on the EMA, I need to place my stop above, and my stop would then be 58, which 58 is the beginning of the next UFO. So I cannot, okay? So I will need to continue trading that upper UFO, which, as I said, I'm not fully confident is going to be lining up the EMA properly. So you will need to watch, and therefore I'm just going to cancel the order, and that's it, okay? So today, my friends, we are leaving the session, and the only trade we got running is the New Zealand dollar, Canadian dollar, okay? So we are in the trade. If I make a little bit of space on the chart, we have the EMA above us, likely going to push it down. We got on-field orders above us, likely to push it down. The initial part of the trade is a little bit of negative P&L, which is quite normal when you start a trade to see a little bit of red. But really, everything is looking fine so far for this trade to work according to plan. And if not, we have the stop above, so risk is under control. With all of this said, I will just go ahead. Thank you very much for joining me today. I'm just reading the chat box just in case. Jaime, Jose, one key question. Have new UFOs in the Forex New Zealand 21 timeframe for long? We don't have to worry about. Yes, the green UFOs are not a problem on the 21-minute timeframe because in a down climate, buy on-field orders tend to be cancelled. Okay. Now the green UFOs on the 240-minute timeframe are to be concerned about because it's a larger timeframe, and that's why we use the targets there. But on the 21-minute timeframe, could it turn around the whole thing? Yes. Is it likely? Not so likely because of the climate. Because in a down climate, buy on-field orders are likely to be cancelled. So it's good. The trade is good. Trade is valid. Okay, magic. Very good, everybody. Wonderful, guys. Very happy to join you today. See you again on Thursday. In the meantime, take care. Trade well, manage your risk, be disciplined, be professional, keep up the good work, manage your emotions, be a good trader. Okay? See you soon. If you have any questions, shoot an email, guys. Take care, everybody. Bye-bye.